What's up, YouTube? Hope you're doing absolutely amazing. This is my second video. Today I made $5,700 trading the futures market across 20 funded accounts that are $50,000 in size. And I'm going to show you exactly what the trades I took were, and most importantly, writing that out for about 40 minutes. I'm going to walk you through my mindset, what was going through my brain as I was trading, and most importantly, some of the keys that you can use to apply for yourself. So let's jump right into actual trading view charts here. First and foremost, how did I come up across gold and I wanted to long it? So you can see here before the market opened, you can actually see this is Monday, July, and I entered the trade, if you want to snapshot it, right around there, okay? So the way that I trade, I mark out levels based on typically hourly time frames, right? So I actually saw that on the hourly time frame, we had this prior area that was a prior market open for the June of 22nd, and that was the Sunday, right? It says market open. And then that level got actually traded through, as you can see here, but it didn't really react. So I consider that a 3 to 5 level in my books. To be more specific, that just basically means that the level is not super fickle in a sense, but it's still something to look out for to take a trade off of. Now, for me, I mark out these color change levels as solid levels. Like these are the levels that I would want to take trades based off of in typical nature. Now, here's the thing. In terms of the actual trade that I took, if you actually go on to the specifics, the trade was a continuation long to the upside. Before I took this trade, it's very important to understand the overall context of gold coming into the market, because I think context is very important. That's how I have conviction coming into my trade. So going on the daily time frame, what you'll actually notice is, or even let's go on the weekly time frame here, you'll actually notice overall we're in some form of channel, right? So I don't actually use these as entry criteria, but I do understand that they are powerful to take trades off of. So what you can see here is we've had higher lows and we've also had higher highs. Now, more specifically coming into this particular week of Monday, you can see here we've made a push higher. So we sniped liquidity from there, then we made a push higher, and then obviously we made another push coming into last week. So what I'm thinking right now is before we make a reversal, likely we'll have some sort of hit on this high, potentially go for more all-time highs. The narrative is obviously bullish with gold. So that was my logic coming into the day, right? Now, first and foremost, when the market opened, I didn't see this. This is Monday, right? This is when the market just opened up and we were at these levels that I'm interested in. How did I end up having the conviction to actually take a trade, and why did I do that? Now, full disclosure and full transparency, I'm usually an ES and NASDAQ trader, but I didn't actually get a shot at trading those just because they were at all-time high levels. And typically when the markets are at all-time high levels with ES and NASDAQ, I'm a bit more risk off and I would want to be a bit more patient. Now, obviously I had a setup planned out. I didn't end up taking it because I saw one on gold that I thought had higher probability of hitting. I actually did not take a large trade on gold. It was only with, I believe, 4 contracts on the micros, and it ended up making me about 6R on the trade. So jumping right into the specifics here on the hourly time frame, I trade at 9:30 Eastern time. So let's just jump right in and show you the actual execution. Now you understand where the market's headed. What I'm looking at in the beginning of the market is, given that I'm thinking that this is going to run up, I'm looking for continuation to the upside. I'm looking for strength, right? I don't want to see weakness on the actual charts. And if you actually notice, coming into the actual open of the day, we had a lot of strength, 9:30, 9:40, good amount of strength. We broke that level that I talked about earlier, that 2 out of 5, 3 out of 5 level. 2 out of 5, 3 out of 5 just means it's been closed through a few times. I rate levels 4 to 5 and 5 out of 5. More about that in a different video. And, basically speaking, in the initial start of the market, I'm looking at continuation to the upside. So higher highs and higher lows, I trade very simply, but I do try to get good entry points and make use of continuation trades to the upside. So this is the level that I was looking at. Now, first and foremost, how did I have the conviction to take this trade? It's because I already had an underlying bias. It rejected off this 2 out of 5 level prior market open. And if you know anything about gold, one of the things that gold is really good at is I was looking at these volume gaps to the right, and I saw this as an opportunity to take a very low risk trade with high risk reward. So that's exactly what I did. So just jumping into my specific entry here, what I did is the moment the 2-minute ended up bouncing here, it sniped liquidity to the downside. I actually ended up doing an execution on the 2-minute chart the moment it actually broke, more specifically, this high. So that was my initial entry, right? So it broke this high. To me, that's confirming that it's moving higher. The best entry would have actually been here, and that was actually a mistake for me. I fat fumbled it because I set my stop too tight. My initial trade, oh my God, the entry was so clean. It was like right around here, would have gotten me an extra 1 or 2R. But the problem is I set my stop beneath this one when I knew I should have set it beneath this one. That was a stupid mistake. And yeah, always set your stops beneath the relevant lows. For me, it's beneath that lowest low because I'm thinking the market's going to continue to the upside. So yeah, I got stopped out, but I still realized that the trade is very solid. So what I waited for was as follows. You can actually see the volume started coming in. And when it broke this high, that's when I entered the trade. Now, what was my initial target? I actually rode this trade out for 40 minutes, and that's how it is in trading. Some days you play more offensively and you let your R play for you, because I think the big mistake that a lot of beginning traders do, and I used to do the same honestly quite a bit, is you're afraid of losing profit. But I think one of the things you have to understand is, number one, the asset that you're trading. So if you've traded gold, you know that gold breaks through levels pretty aggressively. It's like fast and furious. And the second thing you have to understand is the probability of doing so. So that's the part of the reason that I assessed that the volume gap was pretty large. So contextually speaking, for me, I knew that I had a decent shot at actually writing this out to where, right? So I'll show you that exactly in a second here. But you have to understand my principle of thinking before coming into the trade as to why I even thought about holding it for 40 minutes in the first place. And I didn't necessarily hold it all the way through thinking it would hit the target that I did or get 6 or 7 hour, whatever the case is. I actually did a lot more of moving up my stop loss. I'll show you exactly what I did here so you can see it. So entry, pretty straightforward. There's no reason to close the trades. Based on the system that I trade and the way I draw out levels, this to me was a swing point, right? So I marked that out as a level. So swing points, the way that I understand the chart, the market is, those are areas where the market reversed from up to down. So typically speaking, there's a lot of sellers that overpowered the upside movement and moved to the downside. It's very simple, right? But that's a swing point. So what I actually ended up doing here is I marked it out as my initial target. I wanted to see the reaction at the swing point, how it would go. So initially I marked out my trade. It ended up making on that specific trade about $380 US across 19 accounts, then about double that across the 150K funded account. So let's look at that exactly specific here. If you look at it, what you'll notice is, okay, cool. We have out here on the risk reward tool, just moving it up a bit. Big part about trading is we have to understand like what the risk reward is at all times. Is it worth staying in the trade or not? So initially, my initial trade, if we make it black and white, was about a 2R, okay? Give or take a 2R. But what I was looking at here was, how does it move at the level? Is there any resistance? And I was watching it on the 2-minute chart. Reason being, gold is an extremely powerful asset class. It moves very quickly. So I was looking at it on the 2-minute. First and foremost, cool. It snipes all the way through, zero resistance. And I'm just waiting on at least a 5-minute to tell me I'm off. So I'm waiting for a 5-minute close, because at this point in time, it's about 30 minutes into the market open. And now the market's calmed down a bit, right? It's not as aggressive in the first 30 minutes as it is in the latter 30 minutes. So now I can actually hold my trades a bit longer. And I'm looking at, again, higher time frame contextually speaking, I'm thinking I'm doing fucking great, right? So if you look at the 15-minute chart over here, when I entered the trade, it is still forming, right? And I'm thinking, okay, cool, man. If the 15-minute chart can close above these swing points, that swing point's not respected. I'm going to go for the next swing point. So that was the next target here. So on the 5-minute chart, effectively, once it really started moving and it closed, this is really when I started switching on my lights and being like, okay, cool, man. Like at this point in time, I'm up about dynamically 3R. And dynamic risk reward means you got to be thinking about at all times in the market, does it make sense for me to stay in this trade for longer? Yes or no? I think it's a very important thing as a trader to understand that not holding it to your TV is not always the best case scenario. If there is new information coming in that makes you realize that's actually not the smartest thing, then I would exit prematurely, no problem. But I typically have a pretty solid 2-3R expectancy in most of my trades. And I was expecting anyway the 5-minute to start showing me forms of counter trend movement, right? So I was waiting on that. Now, anyway, while I was trading, so I actually marked out this prior area as a prior swing or prior high on the 1-hour chart. So I marked that out in history. That was helpful as well. So this area right here, this 3407 level, that's where I was looking at on the 2-minute chart, at least target there. So obviously now at this point, this is where the 5-minute closed. I'm looking at it pretty aptly. Now it snipes all the way through and I'm thinking, okay, cool, man. Like I'm just going to hold it to the next swing point, which is 3411. So at this point in time, what is my RR on the trade so far? If I ended up holding it, it's probably around about 4.7R, right? 4.7R. And here's the cool part about it. I actually ended up trimming the position, some of it at this area. Once it started breaking here, I believe I took 4 or 5 contracts. I'll double check, but I ended up cutting like one contract around this area just to secure some profits, or I think I did 2. Then I had 3 remaining runners. So my next point was, okay, cool, man. Once it hits here, that's when I'll start looking at potentially reducing, right? So it ended up coming all the way there, making a bit of a reaction, and I ended up cutting a bit more of my position there. At this point, cool, I have 2 more contracts left in the position, and let's see what happens. So here, it ended up reacting a lot at this level. This is where a lot of traders would just full port exit at this point, because this is the next swing point, and a lot of people would just exit, right? It's like, fuck it, I'm not gonna stay in this trade. What's the point of it? Like, why should I stay in this trade? It's doing a lot of rejections. The market's like trying to bounce down. But this is actually what I was looking at, was both on the 5-minute and the 2-minute. Let's just talk about it 2-minute first. What you can notice is the market is not wanting to go down. Okay, it keeps on higher. And if you've ever traded gold or NASDAQ, what you'll come to realize is typically that's just a form of consolidation, right? So before markets move higher, they need to consolidate before making a push. So we've made a decent amount of movement, and that was my interpretation of it. We're just going to consolidate a bit before making an intraday push. Again, we haven't even crossed the first hour of the market at this point. So I do believe it's worth holding that trade. Now, the second consideration, let's go back on the 5-minute. You can see here, this shit, it's like, cool, don't want to exit. I have no reason to exit. Okay, you know why? Because I was trailing. Okay, trails are really good for having zero stress. So once it actually started moving to the upside, I decided to trail my trade all the way here. So I ended up trailing my stop loss beneath these lows once it started pushing to the upside. And I was like, cool, man, if it breaks that, game over, Mayday, I'm out of the trade. But guess what? It never fucking broke it. So dynamic risk reward for me was what? I'll tell you. This was pretty fun. So you can see here, I was actually targeting this particular high. I'll tell you why on gold. Again, remember, my overall bias and read on the day was, yo, I definitely want to make some fucking money on this boy. All right, I want to make some money. So I was marking out prior high area. So there's a prior high over here. And very interestingly enough, I didn't mark any of these other swing points. I'll tell you why. Because there's a concept in trading that I use a lot of, which helps me with picking better targets. I call it a compression. So it's like a spring being compressed. You can actually see the market is literally making a set of lower highs, right? And lower lows. So typically speaking, anyone that went short, they typically set their stops above these highs. So my logic was, okay, cool, man. We have a decent amount of room to move from here all the way to here before the next significant gap. And you can see also with gold, that thesis is backed up with my volume gap. So that's typically an area that you can hold a bit, right? So that was my logic, yeah? Anyway, I was very smart with it because I know that's my thesis. I can move a bit, but at the same time, I'm not willing to give up so much profit. At this point, I'm up 5.75 R. I want to make some money. So anyway, my next target here, the next high that I picked. I was thinking about going into, okay, cool, man. I'm going to set my risk reward here. Now I'm thinking about it as another trade, right? I'm not thinking about it as my initial trade because I've already trimmed, I've already made some money. So all I have right now is I'm risking the profits that I've already made. Risk-free for me. Because like worst case scenario, I get stopped out, I've already made money. I'm up 2, 3 G's on the day. It's not a big size. Typically, this is probably a third of my usual size. But again, risk off day, I don't trade gold as much, and Monday to start the week. So that was my logic coming into it. I'm just not as familiar with gold as I am with ES and NQ, which I'm trying to change, right? So anyway, I set my trailing stop there and I targeted this high. Now, most importantly, as we're going up to these levels, what I'm really noticing on the 5-minute, I'm just waiting, right? I'm like, bro, just give me a pop. Okay, cool. Shit pops aggressively, right? But here's the next thing. I actually entered size over here. Where did I add size to the trade? So I probably cut about 3 contracts at this point. I had 2 contracts remaining. So what ended up happening is I actually ended up adding 1 more contract when it broke, when it was right around here. So like breaking these, when this formed and retested, it come to the upside. I was like, cool, man, I'm pretty damn confident. My stop's still there. So dynamically, my risk reward is now here, right? So that's my RR. My risk reward means how much I'm risking to make. So now my dynamic risk reward has changed again. It's 3R now to hit that top target. And eventually ended up coming up to the top. I sniped up probably about 3/4 of my position over here. Like I had 3 contracts, 2 gone, 2 micros away, sniped up again. I was basically like, okay, cool, man. Like we're really pumping, ended up cutting a bit more over here. And then I had a trailing stop beneath these lows right here on the 5-minute chart. And I was like, go on, I'll show it to you guys here. So effectively broke up. I had a 5-minute trail right beneath that low. And I was like, cool, man. So it ended up pumping, right? Ended up getting some profit here. Ended up doing a trailing stop right there and ended up stopping me out. And that was the entire trade. So if we actually do the math on the entire trade and we take into consideration my new entry points and all that shit, so basically you could probably average it out to about yay. And 6-ish, yeah, probably if you averaged out the entire position, it's probably around there. And with the entry, probably go up about there. It's about a 6R trade, give or take. So that's about a 6R trade. And again, risked about 380. I made 380. So divide 380 by 6 and you get about $40, I believe. Yeah, give or take. Yeah, nah, 50, 60 bucks. Yeah, so 60 bucks, risked decent amount to make a decent amount. So that was so as I was saying, that was the trade that I took. That was the way that I trailed it, and that's how I made the money. Now, final trade that I took, I rushed into it. I ended up entering another trade, just a FOMO trade, because I was like, I can go higher. Mistake. And over here, ended up cutting it immediately right after when it retraced. That was stupid. I shouldn't have done that, and I lost another 40 bucks. So initially, I was up about 7K for the day, gave back about 6.7, gave back about 1 grand, so ended up closing the day at like 5.7. And anyway, man, like that was pretty much the trading day. That's how I saw it. I hope that helped for you. That's how I take trades. Now on NQ and ES, I did not end up taking any of these trades, candidly speaking, because yeah, man, it was at all-time highs. I was really thinking and considering it. In hindsight, I probably should have, because your risk reward is basically uncapped. Just ride that shit, exactly what I told you. Wait for these 2-minute swing points, place your stops beneath those, and ride that guy up. So the risk reward would have been fantastic on ES. I'm journaling that, and that's about it. So I hope this helped. And if this type of content is useful for you, then please let me know in the comments. Obviously, this is my second YouTube video that I'm going into more details and depth about how I trade, the decision making behind it. I've been trading for 5 years now. So if you found this helpful, please show some support, show some love, just because that tells me that this is actually helpful for you. I don't want to just be one of those guys that talks fugazi. But outside of that, hope that was helpful. That was about an hour trading day. I was in the market for about 40 minutes and ended up closing the laptop at about just under 11 o'clock Eastern time, and then had time to journal it. Have a blessed day and catch y'all.